What do you see as the catalyst for popping this bubble?
Well, again, I think it's going to happen in the dollar. And the reason I think so is I think that the Fed will keep blowing air into the bubble until the dollar cracks. Because the way the Fed keeps everything propped up, the real estate market, the stock market, the bond market, the whole economy. The reason the U.S. government can keep spending money is because the Federal Reserve keeps printing it. But the key is, at some point, that money won't have any value. And that's what ends it. Because in order to prop up everything else, the Fed is sacrificing the dollar. Now, right now, they keep printing money and the dollar's value hasn't collapsed. So they can keep printing more. And they're going to keep printing more and keep running deficits until the dollar collapses. Because until the dollar collapses, there's no reason to stop. I mean, why end a good thing? Why rain on your own party, right? So they're going to wait for a crisis. Only this is going to be much worse than the financial crisis of '08 because this is going to be a U.S. dollar crisis, which means it's also a sovereign debt crisis, U.S. Treasury bonds, because Treasury bonds are just IOU dollars into the future. And the big difference is when the crisis is the dollar, the U.S. government can't do anything to bail anybody out because all they can do in a crisis is print more dollars. But if the dollar is the crisis, then printing more just throws gasoline on the fire. So this next crisis that's coming, no bailouts, no stimulus. Everybody is going to have to pay the piper when we have a dollar crisis. And believe me, the bill is going to be huge.
You see them raising interest rates?
Eventually, yes, when they have no choice. But they're not going to raise interest rates until they have to, because the minute they raise interest rates, everything collapses. And when they raise interest rates, that's when the U.S. government has to confess that it's broke and it has to start cutting spending. Hey, we can't do any of these programs. In fact, we have to cut back on the programs we already have because we don't have any money. And we can't get it from the Fed anymore because the Fed is no longer in the business of printing money. The Fed is in the business of shrinking the money supply. It's trying to fight inflation. So it's destroying the money it already created. It's raising interest rates. So I think in that environment, not only can't the government borrow new money, it can't even repay the debts that it already owes. It can't even make the interest payments. Because remember, the bonds are all short term. So the T-bills, when they mature, they got to roll them over. Well, they won't have the money. So the government's going to default. That's what's going to happen. Just like subprime borrowers, when they couldn't make the payments, they defaulted. The U.S. government is a subprime borrower too. Without the Fed, all its checks bounce. And if it doesn't have the Fed, then it defaults. And so it's one or the other. It's either hyperinflation or default. So you decide.
Pick your poison. So for an average investor, they should be looking at what now?
Well, alternatives to the U.S. investments, alternatives to the U.S. dollar. Look at some of the foreign markets, both developed and emerging, which I think the emerging markets are, going to be a little rockier, bumpier, but give you more long-term gain as the whole world, moves past the U.S. dollar and the U.S. dollar is no longer the reserve currency. But you need to have very unconventional portfolios because this is a very unconventional outcome that the establishment is not prepared for. They're going to be blindsided by it, like '08, like 2000, only the Fed's not going to be there to bail them out. That was what happened. If you were completely wrong, if you were completely oblivious to the problems that caused the 2008 financial crisis, it was okay because the Fed bailed you out and you ended up making money anyway. But it's not going to work this time. So you got to bail yourself out prematurely. And that's what I'm doing, right? If you're interested in, having me help you implement the strategies, then, go to Europe Pacific Capital's website or my mutual fund website, asset management company. This is my company here in Puerto Rico, Europe Pacific Asset Management, and epacfunds.com is the website for my asset management company. And you can speak to one of my representatives about the strategies and how we can work them into your portfolio. I have 5 proprietary mutual funds that could actually be bought anywhere, or you can have them in specialized wrap accounts that we manage at my company. Mm-hmm. And I have separately managed accounts of individual stocks and bonds that we manage all overseas, international investments.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now, let's continue.
So what happens to the United States and its currency of the dollar?
Well, the dollar is going to get marked down. I mean, look what happened to the dollar in the 1970s. The dollar lost 70% of its value, 80%. I mean, prices went way up. That's why gold went from $35 an ounce to $800. That's why oil went from $3 a barrel to $30 a barrel. I mean, the price of everything went up in the 1970s. And in fact, because money lost so much value, that's why so many women started to work. If you go back to the 1960s and you look at the typical American family, the housewife didn't have a job. I don't care what job the husband had, butcher, baker, candlestick maker, right? Fireman, policeman, teacher. His wife didn't have a job. That one paycheck was enough, had enough buying power to support the entire family, right? But by the end of the 1970s, early 1980s, that paycheck had been so diminished by inflation that all of a sudden the guy couldn't support his family anymore. His wife had to go get a job. That really was the beginning. You know, people want to say, oh, it was women's liberation. No, it wasn't. Women were liberated when they didn't have to work. That's liberation. When you're forced to work, that's when you lose your liberty. You don't have a choice. You got to leave your kids at home and you got to go out and work because your husband can't support you anymore. And that was a big change, you know. And so I think we're going to see another substantive change this time where we wipe out retirement. I said earlier, no one's going to be retired anymore in America. Everybody's going to be working because no one has any savings that are going to have any purchasing power.
Yeah, and what's your upbeat prediction?
Well, my upbeat prediction is that maybe this crisis will be a catalyst, and this is maybe wishful thinking, but maybe a catalyst to cause America to understand finally the root cause of its problems, meaning government and central banks, and that we can kind of go backwards to the principles that were enshrined in our Constitution by our founders and go back to a free market economy with limited government and sound money. That would be great if we could do that. And then we could marry, 19th century liberty with 21st century technology. And then we could have an unprecedented economic boom.
Yeah.
Because if you think of what America accomplished without computers, right, and all the things that we have now that we didn't have 100, 200 years ago, just imagine what we can accomplish if we had the same freedom that we had back then with the technology that we have now. And in fact, had we had the same amount of freedom in the 20th century and now 21st that we had in the 19th, we'd have much better technology right now too. It's hard to know how much better off we'd have been, how much wealthier, how much higher our living standards would be now had we not gone off on this big government tangent and created this huge welfare state and given so much power to the central bank. I mean, it would be a whole different world here, I think. We might actually look like the Jetsons by now. Who knows?
But you're saying this right on the heels of a $1.9 trillion stimulus package. So
it's a sedative. It's not a stimulus. It sedates the economy, but it does encourage more reckless spending.
It's just people don't need to work anymore. There's no productivity. It's going to decrease productivity. Such an amazing amount. Well,
we're paying people not to work.
Yeah.
We're giving them a better deal.
We're giving them a $25 an hour or so with their unemployment and with this, before even stimulus. Why work at even $15 an hour when you could stay home?
Nobody reported. Last week, the trade deficit, merchandise trade deficit, biggest monthly trade deficit in history, right? Why do we have these huge trade deficits? Because we're not producing. We're just producing money, but that doesn't produce the products that you buy. So we're relying on overseas economies to produce the stuff that we consume. Well, why should they do that? For what? In exchange for our pieces of paper? What the hell do they want those for?
Right.
They can print their own money.
Right.
What people want are goods. That's what makes your life better, not having a stack of paper.